All right, good morning. All right, it's been a couple days since I posted, but I wanted to post just to remind you I'm still here. I wanted to talk today about the frustration of investing. So, in theory, right, when it comes to the stock market, things can only go up or things can go down, right? So you can either be long or short by calls or puts. Things can only go up or things can only down. But it is frustrating when you zing and then you zag and it doesn't go how it's supposed to go. That's the short term view, okay? But if you stretch it out long term, things have a trajectory, okay? And it's you got to look at it as like life, okay? Things go up and down. You have good days, you have bad days, you make money, you lose money. But in the grand scheme of things, you're always trending upwards. Or if you're not doing well, you're going to be trending downwards. And that's the same thing with stocks. So, and it's about staying the course, okay, the long term view, and it's about maintaining your discipline and your focus and staying true to yourself and your objectives and your goals and what your intentions are. Okay, so like I said, this can be very frustrating at times, and I will say in the long term you will get rewarded, which is why I practice the philosophy of take profits. And that's worked well for me, okay? And I just quantify it in a easy to understand way, okay? If I make $100 a day or $250 in a day or $500 in a day, I say to myself, is that a good return? Is that a good return for today? And if the answer is yes, then I take the trade. Okay. But sitting there with gains on the table and not realizing them or executing them, that's how you can lose them. From my experience, especially with the stocks that I deal with, and I tend to deal with stocks that can move, will move, have shown tendency to move, be volatile, because really in the volatility is where you make money. Stocks that are moving now, if you want to be a bank and you want to buy a stock for $1 and a year later it's worth $1.12, then you can go do that. And as long as every year it goes up that amount, whatever, 12 cents a year, then that's predictable, and you can that in itself is forming a pattern from which you can capitalize on. So, but you got to stay the course, and you got to know when things pop up like that. Like you'll see a stock and it'll go ding. Now, once again, you have to think back to the law of averages, where the likelihood of it going back down is magnified now. Okay. So, and the inverse too. So if, let's say, a stock is going down and it's doing things and it's doing things and it's making gains and people are just recognizing, at some point that stock will pop up. So that's what today's video is about. I think these types of messages, these types of notes for you guys, I hope will give you confidence to go out and get into the market, buy something, open up an account, get involved, open up a Roth, open up a cash account, and at least get involved, and at least own a piece of the American dream. So every day I get up and I look what's going on in the market. Am I up? Am I down? What can I buy? What can I sell? Where can I take profits? Where can I take losses? Because that's a part of it too. Where can I take losses? What doesn't make sense anymore? What isn't going in the direction I don't want it to? And that's what I do. And that's called managing the money. It's called managing the money and not letting the money manage you. A lot of people are afraid of this stuff, right? And they'll buy something and it doesn't go, in the direction that, and they freeze. They don't know whether to buy, sell, or hold. They don't know what to do. And this is about having the confidence to say, "Oh, stop! I don't like the direction that this is going. Let's change course," and knowing that it's okay if. One of the things I like about owning stocks and the beauty of trading is you can always buy it again. You can sell it. You can get back into it. You can, wait for more information. You can get in, you can get out. There's other strategies. You can sell calls, you can sell puts. There's a whole bunch of strategies that you could utilize to mitigate the risk or lighten the load or get paid for your time or something like that. So, just keep punching. Just keep punching. My suggestion would be for when you're starting out to buy a big company, a stock that's $50 or $100 or a well-known name, so it's not gonna fade away. And then once you start making little gains, then you take your little gains. Then maybe you can start playing with something risky or small caps or what have you. And that's the approach I would take it. So. That's all for today. I will be going away for Christmas and New Year's, but I'm hoping to post at least once or twice and keep you guys in the loop. All right. Thanks for your time. Talk to you later. Bye-bye.